Hi, everyone. Teresa Timms, President TDR Mortgage and Real Estate Group in Upland, California. We are going to be talking this week or today, tea time. You just do it. Like I totally cut that up. Totally wrecked that. You do the intro. Like,
okay.
You're turn so it good around. You're so good.
Okay, so
I'm just going to sit here and be quiet.
Okay. So this week's theme is different types of loans. So yesterday we went over conventional loans.
Yes, we did.
Today we're going over FHA loans, and tomorrow first time home buyer programs. And just a reminder, guys, we do these live on YouTube too. So if you want to watch it on YouTube to get a different angle, or we also upload these every single day after we're done with them onto Instagram, so you can rewatch it whenever. Okay, so for today, our first question, as always, is what's going on with you and what is new in the market today?
Well, I feel fucking fantastic, and I haven't felt this relieved, I don't think, since probably January or February. We've been just very, very busy, and I've been understaffed, and I'm fully staffed, and I just feel great. I went out on the beach today and took a walk in the morning, and I always mean to do that, and I rarely get to, and things are just coming together, and so it's a good day in paradise today.
I second that.
You second that?
I second that.
I think I'm going to take it off the tripod because we're trying out a different way of filming today, guys. So every time I move it, it's cracking.
What's cracking?
Like the tripod, and I don't want them to hear it. So I'm going to have to hold it.
All right, then.
It's a little bit shaky, but at least we'll get better angles.
Yeah, and I've noticed rates look really good today. So before this adverse fee, there was a mad rush to lock, and I've actually seen pricing rebound from that adverse fee. We're seeing a lot of lengthy turn times and underwriting with most lenders, and some lenders you have quick turn times, but really you're going to be doing what's best for the borrower or best for the transaction. So you're going to be picking a lender specific to the transaction and the nature of the loan. I'm a mortgage broker, and what that means is I'm authorized to originate via as a third party originator to these wholesale lenders. So we kind of go take out the middleman. We don't have a lot of overhead. We're not a huge company with all kinds of bills and a fancy office, and we were able to pass that savings along to our borrowers. So being a mortgage broker, we're continually shopping loans to find the best rates for our people.
Alrighty, so that's it for the first question. Do you have anything to add?
No.
So what's been new with you, Jess?
I feel super excited. It's weird. It's like I wake up and I'm like excited to come to work, and that hasn't happened in a long time.
It's not like when you wake up and you wake up and you're like, I just want to put the covers back over my head.
No, I'm like excited to like get pretty and like come in and see you girls, and it feels good. So I'm really excited. Yeah.
All right.
Alrighty, so second question. What is an FHA loan?
Oh, everything's going to ring.
Guys, if it's pausing, that means we're getting a call in, so sorry about that, but yeah,
so an FHA loan is the basic bitch financing of all the loans. It's not sexy like the conventional loans. It's not all like, celebrated like a VA loan. It's a hard worker. It's a great product. It fits a lot of situations. And I love that loan. Like I cut my teeth on hard FHA loans, and you can literally make somebody qualify by crafting and structuring it in the right manner. An FHA loan is a loan that you can put 3.5% down. It has monthly mortgage insurance in it. It turns a lot of people off because of that. It has upfront mortgage insurance, but for the privilege of being able to buy a house with a 56.9 debt to income ratio versus a lot of conventional product at a 45 debt ratio, it is one hardworking, one size fits all loan. And the debt ratio can be very, very significant because a 45 debt ratio could mean that you only qualify for 400,000 on a conventional product, but going into the FHA product, you could go maybe to like 525. Wait, did I say 400? Yeah, 400 to 500, 525. So that may not sound like a lot, 45 debt ratio to a 56 debt ratio. It is a lot. It is a lot. So it's a hardworking product. It's tried. It's true. You can go with less than perfect credit. There's a lot of little nuances to it that makes it the perfect loan for the person that is coming out of a recent credit event or a first-time buyer, even repeat buyers, because you can get in with such a low down.
Yeah, I think it's a good like starter loan. You know, like we have a lot of clients that started an FHA loan because it was, you know, they had little down payment. They weren't too savvy with their credit. And we're like, we have counseled them throughout the years. So now they're getting into a conventional, right? We're able to refinance them and get out of that monthly mortgage insurance. So it's a great starter, first time buyer, or like she said, people that are coming out of, you know, a bad credit situation. I think it's a great
2 years on a bankruptcy and only 3 years on a foreclosure. Yeah. So
it's good. I like it.
Yeah, I like it a lot too. Yeah. The only drawback is that in certain counties, San Bernardino County, Riverside County, you have homes that are over, you know, a $500,000 sales price, and FHA, the biggest drawback are the loan limit restrictions. Yeah. And so in Riverside and San Bernardino County, you can only go up to a 475. Out in LA and Orange, you can go up to like 780 sales price. So there's a big disparity, and it goes off of median income, and that's why you have such a big disparity. So once you go over that 452 whatever FHA loan limit, then you go in Orange County, you have something called high balance. But in Riverside, and that's how you can go up to the 700s. But in Riverside and San Bernardino, we don't have high balance. Wah, wah, wah. Yeah. So
it really sucks.
It does.
The values are going up.
Yeah.
Like it doesn't make sense, but it hasn't made sense for years.
Yeah. It never makes sense. But it's and that's why it's designed, though. It's a product designed specifically for median income type people. And so.
Yeah.
Yeah.
I like that.
What else do I like about it? So basically that's an FHA loan.
Yeah.
Okay. So third question. What type of borrower would be most suited for an FHA loan?
Like we said, a person that doesn't quite meet the conventional.
I think sometimes too, when you give somebody their down payment options, and in an FHA loan where you're doing 3.5%, and maybe you're getting some money for closing costs, and the house is a fixer, like it needs some stuff, and you know, maybe you do have 5 or 10% down, but it needs a lot of work. And if you put the 5 or 10% down, that's going to rid you of all of your reserves. So an FHA loan would be a good fit for people that, you know, need to put some money into the house and make it better and don't want to take out a second or don't have extra money. I think it's a good thing for that. It's also a really good thing for mobile home financing, which we don't do that much of. It's a good thing for, you can cash out on it too. So it has all the features of like a regular loan. It's just expanded qualifying. So it has expanded qualifying requirements.
So you need to have at least like a 640 FICO to get a good rate with FHA.
Yeah, a lot of people
could have lower, but then, you know,
yeah,
in order for it to make sense where you're getting enough credit with the lender where it's planning out with the best rate, 640 and above is kind of where.
Yeah, and I'm doing, so I have a client right now that has a 659 FICO, and we have her at 2.625. And she's paying, I think, $2,500 for that. So that's a killer rate. FHA has really, really good rates for when you're putting such a small amount down. You know, if you're doing conventional, 5% down, that rate is probably going to be low 3s versus FHA is probably going to be mid 2s.
Yeah.
So that's another reason why sometimes people will opt for FHA. If they're putting a small amount down, it sometimes yields a lower payment on the FHA loan as opposed to a conventional loan.
Yeah.
So there's a lot of really great applications for the FHA loan.
Alrighty, so fourth and final question: what are the requirements to be approved for an FHA loan?
Go ahead, Jocelyn, take it
So
away.
you need to have debt to income ratio there. I mean, it goes to 56. There's different scenarios that go into play for that. The lesser your FICO score, the more restrictive they're going to be with your debt to income ratio.
And like all loans,
yeah.
you need to have the basic eligibility for any type of, traditional mortgage product that's insured by Fannie Mae or Freddie Mac is you have to have 2 years on the job. The exclusion to that would be maybe you just come out of college and you're
we can document you went to school for what you're working for.
Yeah. And then you have a couple, you're somewhere, your job's secure, you've been there a month. Your credit, she mentioned 640. That's a minimum baseline score. You can get it lower, but if you have like a 600 or 610, just don't even worry about it. Let's help you get the score up so you can take advantage of the lower rate.
We're experts on that too.
So cash. So the down payment's 3.5%. The down payment can be a gift from a family member or friend. You can take money out of a 401k.
IRA or whatever type of to get your down payment.
So cash, credit, income. Yeah. So
those are the requirements.
What are the requirements to be approved?
It's pretty simple.
And the requirement is that you come to TDR Mortgage. Call me, call Jocelyn,
We're here to help you.
call Julia, pick up the phone, 909-920-3500. You can text too, like we're so 2020.
And we speak Spanish.
¿Habla español?
Sí, habla español. So if you have clients or know people that, want to buy a house but are scared because every lender speaks only English or, they don't feel comfortable signing documents.
And Jocelyn is looking for some new realtor partners. So if you know anybody that needs an habla español mortgage loan officer, give her a call.
A good one.
A good one.
Yeah.
Okay.
So that's
all right. That's it. That was easy today. Thank you, Jules.
Did anyone comment or ask any questions?
Somebody said, what is the YouTube?
Oh, if they just put in my Teresa Timms, they'll find it.
Yeah.
Yeah.
Super easy. Or even TDR.
Yeah, I've been trying to do like a channel name, and that pipe dream just I don't know. I think
it's too much work. Yeah, it's already branded. It's already set.
But I think it had like the URL. I tried to get the URL SoCal Loan Pro to match my website, but if you just put in Teresa Timms, it's super easy.
Yeah.
Yeah.
And we have people here.
There were like 4 people.
Cool. We're getting more.
I wonder, can you guys, if they comment, so I can say something. If you're live, if you are there, leave a comment. Let's see.
Yeah, I think it's just about consistency. Like the more that we go live, people are going live. Okay. At 4-ish. I'm going to block out some time for tea time.
Yeah.
All right. Well, thank you.
Tomorrow we're going to talk about first time buyer program. And tomorrow we're picking the winner of the 50% off.
Where's it at? I don't have it with me, but should we mention that right now?
No, we're picking it tomorrow.
But what if we mention it? Well, we don't have the thing.
So comment down below.
We have a giveaway.
Yes.
So if you tag 2 friends in the comments, you can be entered in the drawing to win. I don't know what's the value, but it's really cool. We out here in the Inland Empire, Cask and Cleaver Restaurants, which is combined with Sycamore Inn. You can save up to $200 off your bill. They have really good steaks and wine and outdoor dining. The Cask and Cleaver is like a neighborhood favorite. So
comment below and tag your friends.
Yeah, do that.
So you can